Today we have Richard Thatcher with us. Hi, Richard.
Hi, hello everybody.
Richard is from Movement Mortgage, and today he's going to give us some mortgage updates and also share some secret with us. So when we talk about mortgage update, the first question come up to my head, of course, is interest rates. And right now I'm a buyer. I'm interested in purchasing a house. It's like a perfect time for me to interview you, Richard. Interest rates are going up. Can you tell us a little bit about that and how we should feel about it?
Yeah, so certainly rates have gone up to where we were a year ago or even 2 years ago when we were still in the 3% range. But overall, rates are still very good. You know, you're talking conventional loans, you're still going to be in the mid to high fours. You can still get some of the government things, VA, FHA, in the mid to low fours. So the cost of money is still very affordable. If you compare it to other interest rates that you may pay on credit cards or vehicles, you know, 4.5% to purchase a home that is going to be a long-term investment that potentially could make your family hundreds of thousands of dollars at the end of the loan. 4.5% is really cheap money to borrow, if you want to put it that way. But yeah, rates are going up. If you look at where we were, you know, 10 years ago, rates were in the mid sixes and people were buying houses just as much as they're buying them now. So it's really, in my opinion, I know a lot of people want to worry about that. At 4.5%, even if we get into the 5% at the end of summer, it's still a good cost for that investment.
Yeah, we always get that feeling when we get the interest going up. Oh my gosh, what's going to happen? It's going to be like 2005, 2008. You know, should we buy? Should we not buy? But like you said, 4% is really low, and it should not affect us on purchasing a property. Now, let's talk about USDA loan. That's a subject. That's a loan that I hear more and more often. Can you explain to the people what is a USDA loan?
Yeah, and so I think USDA loan for a lot of people is an underserved product. So USDA loan is a true 100% loan. So there's no down payment assistance program that you have to deal with. You don't have to be a veteran. It is eligible for everyone as long as you fall into a certain area. So the biggest thing with USDA loans is to look onto the map. They have it's a really user-friendly map where you can go into an area, you can type in a specific address. But again, FICO scores down to 640, so it's not a loan where you have to have a 700 or above. There are, in certain areas, the income limitations can be as great as $100,000. You don't have to have reserves. It's a really great loan, and a lot of people either don't know about it or don't know how to use it. It doesn't take any longer to close than a standard conventional loan because, in a sense, it is just a conventional loan, but it's a true 100% loan. And USDA stands for the U.S. Department of Agriculture, so it's called a rural housing loan. So it's going to be for our friends in Florida, our friends in Texas, states like that where there are more rural areas. You know, look into it. Jump on the website. The easiest way to do it is just USDA home loan, Google USDA loan limits, USDA eligibility map, and look around because you may have a buyer that is ready to purchase but maybe just doesn't have enough for a down payment, and there may not be down payment assistance programs in the area that they qualify for. Or maybe they have a down payment assistance program that they're qualified for and have been approved for, but the listing agents on some of these properties don't want to have to deal with those because that can be an exhausting loan process trying to get, you know, we're in California, so CalHFA and GSF, those can be really exhausting programs to get through a transaction. So look at USDA because I can guarantee there's some of you out there that probably have a buyer right now that would be able to take advantage of that. And think about what he's going to tell everybody he knows. My agent got me into a house and I didn't have to put a down payment down. I didn't have to borrow any money for a down payment. It was all one loan and it was a good interest rate. I didn't have the best credit. So really, it'll, I believe, get you more business maybe in that area and maybe become an expert in that area doing those loans.
Now, is it based on lower income, and is there a max amount you can loan?
Yeah. So, and again, the best thing to do is get onto the website. And I know that Jessica's going to post the website or a link to it, so you can just click on it when we're done. But yeah, and it's varied. So, like I said, in California here, where we're at in San Diego County, a family of three can make up to I think it's $101,000 and still qualify for the property. There are loan limits in certain counties too, but again, those loan limits generally are going to be with your conforming county loan limit. So some areas it's 450, 417. I mean, the loan isn't designed, it's like good luck, find a house that's $100,000. Well, it's a great loan program, but there's no houses for that much. It's a viable loan product, and there are properties and buyers out there that will fit into them. I know an agent that lives in back east I believe she lives in Virginia. That's all she does, and she makes national list for loan officers every single year just doing USDA loans. So there's a lot of stuff out there. And I know, like I said, there's people out there right now that have buyers that they could get into a house, next week with this program. So ask the loan officer you're working with. You can call me with any questions. Obviously, I can only lend in certain states, but I'll answer any questions. The loan, for the most part, is the same when it comes to from a guideline standpoint.
And I think that's also a great product for listing agent. They are able to market their property with, a possibility to get 100% financing with a USDA loan. So I think that's also a great product for them.
Oh, you're 100% right. I mean, could you imagine to open up a larger pool of buyers by just putting in, even in the notes, hey, eligible USDA 100% financing. Any agent that has a buyer that is looking for that property is going to see that and say, man, let's go look at it and put an offer in. So yeah, absolutely, Jessica, that's a great idea too.
Now let's go over mortgage secrets. Let's talk about the listing agent receiving offer from different buyer agent. How can they be sure that the buyer is already underwritten? We know there is the pre-qual letter, right? And you have the pre-approval letter, and you also have the commitment letter. And you and I talked about earlier, I'm sure you all know the pre-qual. You really, it's kind of tough to say, well, I'm going to take that offer with a pre-qual. Can you give a little difference between the pre-qual, the pre-approved, and the commitment letter?
Yeah, so if you're a listing agent and you're getting offers in on your property, 9 times out of 10, what you're going to get with that offer from a buyer's agent is either a pre-qualification or sometimes they'll even name it a pre-approval letter. This is a good start, but really that's all it is. It's just a pre-qualification. So a loan officer like myself has just gathered the 4 or 5 basic things. The income, the assets, the credit report, bank statements. We've looked at everything. We've ran their credit, and we say, hey, you know what? It looks good. So what happens then 9 times out of 10 is that file will stay there on the loan officer's desk or in his drawers, wherever. And then he'll say, yes, I even went as far as to run DU, which is the desktop underwriter. So this is going to be good. So what happens is, as a buyer's agent, you go out and you're showing properties for 2, 3, 4 weeks, find a house, put an offer in, or if you're a listing agent, you've had your house on the market for 30, 45 days, you feel you have a good buyer that is willing to get to the price that you want or close to, and you say, yes, we'll accept this offer. So then what happens, that loan officer that 4 weeks ago did your pre-approval or pre-qualification says, okay, great. Here's what I'm going to do now. I'm going to give it to the actual decision maker because I can't make the decision. The underwriter has to do that. So then you're ordering inspections and appraisals, and they're paying for termite, and people are spending money, for only to find out a week later the underwriter goes, hey, did they tell you about their bankruptcy that was only 2 years ago? Well, no, they said it was 3 years ago. Okay, well, now we have a problem. Now everybody has a problem because depending on what was included in the bankruptcy, if it was finalized, when it was finalized, you may not have a deal. You may have just taken your seller's property off the market for a week, 2 weeks, 17 days, whatever the case may be, because we're just loan officers. We, depending on how busy you are, you could do 25 of those in a week, and you miss stuff, you make mistakes, and at the end of the day, you're not the decision maker. So what I always try to encourage people, I do a lot of cross qualifications for agents. If not, try to get what's called a commitment letter. Now, a commitment letter with Movement Mortgage, and generally most mortgage companies will call them a commitment letter, and what that means is a commitment to lend. It's going to tell you that not only has the underwriter looked at it, or not only has the loan officer looked at it, but so has the underwriter. And at the end of the day, the underwriter makes the decision. So definitely, you know, if a pre-approval is all you got, and you have a referral partner that's a lender, I would suggest any listing agent have them at least look through that, make sure they didn't miss anything on tax returns. But ideally, what you want to get is that commitment letter from the underwriter, because that is the underwriter at the end of the day that's going to approve that transaction at the end.
So talking about commitment letter, it could be as good as a cash buyer having a commitment letter, right? And it's you can be competing with a cash buyer because you have a commitment letter. It's as good as cash, correct?
So you're exactly right. Yeah, and the reason that getting your buyer underwritten up front, the reason people take cash offers is because a couple of things. One, they want the money fast. They want to move. They're retired. Or two, they don't have to worry about the deal falling out. So we'll take the cash. We'll take $10,000, $15,000 less, but it's going to alleviate a lot of problems for us. We'll take that loss and then just move on. You get underwritten up front. You have a commitment letter, and you submit that with an offer. You're telling the listing agent, look, this has already been underwritten. Barring some disaster with the inspection, this offer can not only operate or perform like a cash offer. You're not taking the $10,000, $15,000 cash discount. So to a seller, it's great. I get to have all the comfort knowing that the borrower is already approved. They can perform in 12 to 15 days because all the hard work's done, and I'm going to get that extra money. So yeah, it's great. You'll win much more offers if you submit buyers that are already underwritten.
So are you telling me you can close as fast as a cash buyer with a commitment letter?
Yeah, so a commitment letter is a buyer that has already been underwritten through the process. So the tax returns have been verified. The verification of employment has been done. The verification of deposits have been done. All the little minutia that gets done generally when someone finds the property, then they start on that process. There are very few banks that do it. Movement's one of them. But yes, the loan is actually underwritten up front. At this point, we're just waiting for the appraisal. And again, if there's any disasters when it comes to the inspection, 12 to 15 days, which is generally what a cash offer is going to ask for as well, because they're going to do inspections too. They're going to have to access some of that money. It's probably not just sitting under their mattress or just in a standard Bank of America account. They're probably going to have to get it from a stock or a savings account that could take 7 to 10 days to get. So yeah, great way to compete with cash offers. You'll definitely win more offers that way. And I think you and I were talking about this the other day, Jessica. Even if your offer isn't accepted, you at least got it looked at and maybe even countered. Because sometimes these people in this market will just sit around and only take cash offers. And if you can compete with that, you've done a great service to your buyer.
Now, everyone, if you have any question for Richard, I have a couple more questions for you, Richard. But remember, you can go ahead and type the question, and Richard will be happy to answer any question you may have. Now, let's talk about, should your lender call the listing agent on the borrower's behalf?
Yeah, every time. And here's why. When a lender is willing to call and answer questions, talk about the buyer, it just shows the confidence in the file, in the buyer. Even on deals that we didn't win, I've gotten feedback or calls back from the listing agent and have said, and they have told me, Richard, that was so awesome that you called. I relayed that to my buyers or to my sellers. The fact that you were willing to call and answer questions it went a long way. Unfortunately, we didn't take the offer because we got a higher offer, whatever the case may be. But yeah, if you're working with a lender and he's got your buyer approved, hopefully he's got them underwritten. Then you can also explain the process, because what I run into a lot of times is my agents submit an offer with a 13-day no contingent offer. Well, a lot of times the listing agent thinks, well, this must be a mistake. So I always call and say, no, this isn't a mistake. They're underwritten. Here's the commitment letter. Here's what we're doing. This is what we're waiting for. It goes a long way. It really does go a long way, because, like I said, again, it shows confidence that as a lender, because the last thing a lender wants to do is be wrong. So if we're willing to call and say, no, without a doubt, there's no problems. Let's get this offer going.
So let's say the perfect offer will be a nice cover letter, maybe even, like, I know Deanna Ferron, who's our executive coach, what she does a video of her clients, like video of the buyer when they want to purchase a house, and show the family and show how much they care and want that house. So a nice cover letter with appreciation from the buyer, and maybe a commitment letter with the offer. That's the way it should be.
Yeah, absolutely, Jessica. I mean, I think sometimes because we're in this business and we deal with the day-to-day stuff, people forget these homes that people are selling or buying, they've raised children and family. They have an emotional attachment to this house. I've met a lot of people that want a young family to move in, someone who was going to raise children in the home, because they're that emotional to the house. It's not just a piece of real estate to them. So yeah, absolutely. A cover letter, talk about the family, what they do, who they are, how many kids they have. Yes, a commitment letter from your lender. Have your lender call and tell them again about the buyers. Again, does it work every time? No, but I guarantee you'll see more success if you do those things. Deanna does a great thing when she puts that video together and she introduces the people. It's really, really powerful. And again, sometimes we forget that this is very emotional for these people that are selling this house. They want another family in there because it was so good to their family. So yeah, absolutely, Jessica, great idea to do a cover letter. A video is even better. Introduce the people, make it about the people and not just the money. And I think you'll get a little bit further on those offers.
Yes, like everything, it's about the relationship,
Correct.
Now, our last question for you, Richard. How can lender pay mortgage insurance help a buyer qualify for more home?
Yeah, so this is another one of those programs that a lot of people don't consider for a couple of reasons. So everybody knows that if you have a loan that is above 80% loan to value, you have to pay private mortgage insurance. Usually what it is, it's a monthly payment that you pay in addition to your principal and interest, taxes and insurance, and you've got your mortgage insurance. What I've been doing, and a lot here, as the rates have gone up and prices have gone up, there's an option that you can do called lender paid mortgage insurance. And really the lender's not paying it in a sense that we're doing anybody a favor, but what we're able to do is give the buyer a little bit of a higher rate. Sometimes it's a quarter of a percent in interest rate to eliminate the monthly mortgage insurance. A lot of people say, well, my rate's too high. But what they don't see is that your overall payment is less. And now you're also tax deductible on that higher interest rate. So the interest rate's a quarter, so your principal and interest payment may be $50 a month higher, but you've eliminated $140 worth of mortgage insurance. So now you have $100 a month additional purchase power. So you're looking at someone who maybe their DTI is maxed out with the borrower paid mortgage insurance at $375. Well, they can't find anything for $375. So have your lender, whoever it is, say, hey, what does this look like if we do lender paid mortgage insurance? So now the payment, we have an extra $100 a month to work with, which really equates to about $45,000 to $50,000 extra in purchase power.
That's a big difference, an extra $50K on the property. Yeah.
Yeah, no, absolutely. It's overlooked. And the main thing is because, market rate with the separate mortgage insurance might be 4.5. Well, now you're telling these people, hey, your rate's 4.875, but you have to sit down and show them the figures. Look, you're $100 less going this way, which is going to allow you to get into a better home, maybe an extra bedroom.
Yeah. Well, thank you very much, Richard, for being here today.
Thank you for having me.
Thanks, everyone. If you want to reach Richard, we will add his email and information. We will also add the link of USDA loan information. Thank you, Richard. Thanks, everyone. Have a great day.
Thank you, guys.